Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And one of the things I enjoy by hosting a daily YouTube show is as the channel grows, I'm getting more and more interest from around the world. Today, we are going to talk about an article that was sent to me from someone in Australia. It is an article that I intend to leave the link below in this video. But basically, it is 17 ugly truths about real estate investing. So what I thought I would do is bring up the article and we would go through all 17 points together. I will share my belief, my impact, my thoughts on them. I'm sure some of them I will agree with and some of them I won't. But let's get into this and let's just have an honest discussion about being a landlord and investing in real estate. So let me pull up the article here. So hopefully you can see that now. I'm just going to get rid of my picture so we can look at the article together. So again, I will take the link below. It is from au.finance.yahoo.com. 17 brutal truths about property investment. No one else will tell you. So this is written by Michael Yardney. Hopefully I said that right. So Michael, let's see what you have to say. Let's just get to the bullet points down below. So here we go. So number one, property markets go through cycles. Absolutely. I believe real estate markets go through cycles. I have been doing this for 21 years. I will say, I don't know if it's below, but not only do we do real estate in cycles, but I've been trying to be very clear that I think lending has cycles as well. So not only real estate markets, but lending markets. So yes, property goes through cycles. There are some times where it is good and bad. Sometimes there's overbuilding, sometimes debt structures. There are lots of reasons that property markets could go through cycles. Number two, you need significant amount of money to invest. Well, you certainly need financial discipline to save for a deposit. You are absolutely going to be borrowing a lot of money. I just don't know what you mean by significant. I believe something that I did not do, but something that other experts on my channel have since brought to the channel, house hacking. Whether you are Anna Kelly, the Lumberjack Landlord, Dion, Spencer Cornelia, Todd Baldwin, all of these individuals started with house hacking. Some were in multifamily, house hacking quads or duplexes. Others were house hacking with roommates like Todd Baldwin and Spencer Cornelia, two big YouTubers. So I don't know. I don't know if that's a significant amount of money. 3.5% down, $300,000 house, that's 10 grand. I don't know that that's the definition of significant, but I will say that if you think you need 25% down to purchase, that is certainly significant. I would just offer you that there's other ways to get on the property ladder and you don't have to always save 30%. Maybe it's house hacking, maybe it's moving into your first home and trading up and renting it out when you move. There's lots of ways that you can do it. Number three, it takes the average investor 30 years to become financially independent through property. No, that's not the case. I believe, well, our story, Olivia and I, is 15 years in the making. I have many other experts on this channel. It's 10 years or less. Now, in fairness, I don't know the Australian market. Maybe there's lending or guidelines that make it harder. I don't know. But if you're in the US, or at least most markets that I've looked at, I think you should aim for 10 years. But again, if it takes you 15 as it took us, so be it. But I think most people can make work optional in 10 years or less. So no, I don't know. I don't think it takes 30 years. It certainly wasn't my case. Oh, number four, saying I'll be fearful when others are greedy and I'll be greedy when others are fearful is much easier than doing it. I agree with this so wholeheartedly. I have heard this quote a million times, probably, maybe a slight exaggeration, but not much. And all of you out there, most of you didn't do it. I experienced it up close and personal in the 2010 crash. We were running around buying everything we could, and there was nobody there. There was nobody buying 40K houses, 30K houses. I don't know where everybody went. It was weird. Just everybody was scared. So I think that's a cute saying, but very few people have the track record of actually doing it. And thankfully, Olivia and I do. 5, no one really knows what the property market will do in the short term. Gosh, what does he say there? Yeah, short term. Yeah, emotion, crowd psychology play havoc. I don't know. Again, I think again, I don't know Australia, but in the US, or at least in California, we have the affordability index. The affordability index has proven time and time again to be a great indicator. Maybe it's, the 30-year debt structure may be a unique feature of the American lending market. I actually think the short term is easier to predict than the long term. I think real estate moves slower in the short term, but it can move violently in the long term. So I don't know that I agree with this one. Number 6, real estate investment is a game of finance with some properties thrown in the middle. Yeah, I agree with that. I agree with that. Yeah, I mean, if you look at our scenario, we were acquisitions, then debt structure, and then recycle capital. A lot of that can be looked at as a finance game. I think it's a people business, so don't forget that. You're always working in a people business, but as a property owner, you could call it a game of finance. I agree with that. Number 7, property investment is meant to be boring. Yeah. Certainly, if you have property managers in the mix to help with that, it should be boring. Self-management, I'm sure, has more exciting times. But yeah, I would agree that it's supposed to be boring. It's not really truly passive, but semi-passive. So I'd call that boring, sure. There's more free property information available today than ever before, but much of it is useless. I agree. 100, 1,000, 10,000, whatever it is percent. The fact is there's more information today than we had when we started, but there's also more information today than when we started. So it's both are true. And a lot of it is just bad information. Totally agree. Number 9, be careful who you listen to. Man, hasn't the last 2 years taught us that? Again, there are people out there that are looking to take your money. They're looking to, I can't believe some YouTube channels sell fear because it makes a penny. I think if you're willing to sell your soul for a penny, that's a pretty cheap price. And I would never sell my soul for a penny. Clickbait, fear. Yeah. But yeah, some people will. And some people do every day. Number 10, there is virtually no accountability for the many property gurus and their hotspot predictions. Amen to that. People calling for 40% crashes, telling you not to buy at low interest rates. Yeah, they just keep talking. They just keep talking. Yep, totally agree. Number 11, the more comfortable an investment feels, the more likely you are to be taken by marketers and salespeople. Woo, I like that. Yeah, I totally agree with that. The more easy they feel it, I think this is going on big time in syndications today. Trust me, trust me, trust me. Oh, I hate that. Makes me crazy. That's why I teach individual ownership, do the work, learn average in your market. I never tell you what market or anything of that nature because I want you to do the work. Do the work, people. This is your money. It's your future. Take control of it and do the work. Number 12, despite what most would like to think, the biggest difference between ultra successful property investors and the rest is not their property strategy or their investing secrets. Yeah, I don't think there are any secrets. Rich people, what makes rich people more successful is the way they think, their mindset, and rich habits. Yeah, I agree with that. Again, I have these 7 rules behind me that I talk about all the time. Focus, daily discipline, grow your network, it's just the way I think, and it has allowed us to keep moving forward in good times and bad. So I agree with that. If you have credit card debt and are thinking about investing, stop. Oh, yeah. Yeah, certainly if you're paying 18, 21, 25% on credit cards, you're going to be much better off paying that off first. So I agree with that. That works. Residential real estate is high growth, relatively low yield investment. So don't buy real estate for cash flow. Of course, cash flow is important to keep you in the game, but it is capital growth that will get you out of the rat race. I mean, I understand what he's saying there. I hate every word of it. Cash flow, recycling capital, growth. No, I'm just going to say it. I don't like that. It is certainly a low yield investment. I believe that's true, right? I look for 6, 7, 8%. Some markets 10, 11, 12. Appreciation happens, mortgage pay down happens, but it's not something I consider or calculate. So, I mean, I know what he's saying. I don't really like it, but I understand. Number 15, just because a property goes up in price doesn't mean it's a great investment. Exactly. It's kind of why I had a revulsion to the earlier point is appreciation happens. It is wonderful when it does. But just because it happened doesn't mean it was a good investment. It could mean you got lucky. I agree with that. 16. There are 3 stages to your property investment journey. Oh, that's interesting. I sort of talked about that earlier. Asset accumulation, absolutely. Slowly reduce loan to value ratio. Okay. And then eventually you live off your cash machine. Excuse me. Yeah, okay. I could see where he's coming from there. And then number 17, however many properties you think you'll need to provide cash flow, your retirement, double it. I think that's reasonable if you do the work, if you do the calculations. I talk to too many people that say they want 100 or 200 or 1,000. That's lazy. That's somebody else's goal. Go figure out your cash flow, go figure out your units. And then if you want to double it, sure. So, yeah, I thought that was an interesting article. Again, folks, one rental at a time is for you. I'm glad we are getting more and more worldwide audience. If you like this conversation, like, subscribe, comment. If you want to send articles or follow me on Instagram, you can DM me there. It is just one rental at a time. Again, thank you very much. I enjoyed this article in the 17, I don't know, hard truths, or I forget what it was called. But anyways, I will put the link in the description if you want to check it out. Thanks. Bye-bye.